Everyone online says you need to scale with a course. And I say, sell the damn service. I'm Emily Williams, award-winning consultant and productized offer expert since 2014. And I'm here to help you work less, make more, and stop custom building your burnout. Each week, we talk strategy, structure, and the real stories behind sustainable service businesses. You know, from service providers who like doing service work, who want to stay in service work, but also just make more money. If you're ready for all that yapping, then let's dive in. Just wrapped up a VIP day. What was the day? What's the project?
So when we do VIP days, we usually review like all of their bookkeeping software. Like, is everything good? You know, how's your P&L looking? How's all of your statements? And not only for tax purposes, but for visibility purpose. I
Oh,
am huge on like, you need to understand your numbers and you need to understand what they are telling you, not just like, here's my P&L, go file my taxes. So yes, so we looked at everything. We found some errors, we corrected them on the spot, and that was really great. And then we also do like tax strategy as well. Like, okay, well, you're not making estimated tax payments. What could that look like? You know, and even like, are you ready to be an S corp and things like that.
yeah,
And then we plan for 2026. Now, you know, at the time of this recording, obviously will be
sure.
for 2026. So we just kind of plan for the year ahead, look at your goals, personal and business, not just business
Mhm.
goals, because I know that at the end of the day, everything comes back to your personal.
Yep.
So you really have to have that anchor. And also like with clients, when things get hard and they're just like, I want to spend on this and I want to prioritize this. And I'm like, okay, let's run it through the filter of our goals.
Yeah.
How is that aligned? Is it
Yeah.
going to derail you or is it going to, this is what you said was important to you. I'm holding you to it, right? So we do a lot of goal setting, we do a lot of like pricing and offering and like, are you pricing profitably? If
Mm.
you're not, then you're leaving money on the table, you're wasting money, you're paying people out more than you're paying yourself. You're just like not, you're running in circles.
Yes.
So we do a lot of that. And yeah, that like wraps up an entire VIP day. So it's like a whole bunch of sessions in just like one day.
Do you do this? Is this like an add-on to your maintenance services, or do you do this like once a quarter for certain clients, or how does that work?
So no, so those are just for people that are like, I'm doing my own books or I have, you know, an accountant or I just like I'm doing them on my own. Doesn't really matter.
Gotcha.
I just kind of want to get like expert eyes on it, figure out what I'm doing wrong, how and a lot of them sell this time of year
Mhm.
because people are like, I want to make sure my books are good for 2026. I want to make
Mhm.
sure that I am like going into the year with a plan, which is a lot of what I was talking about. I like went on stories and I was saying like, don't wait until January to plan for 2026. You know what I mean? Like you want to do that now because you want to hit the ground running. You don't want to have that like slow season in January. No, you want to know what you're working towards in January. That
Yes.
happens now, not
Yes.
then.
Well,
So,
it was so funny because I remember, this was years ago, but literally the same thing would happen. Every single January was a slow season for me. Q1 was a slow
yep.
season for me.
Yep.
And every single year, come January, February, I would be like, why is it so down? And I don't like it. And it sets this tone for the year for me to be in not abundance and like
Yep.
be in a weird mindset. And it was impacting me in ways. And finally, like after I kid you not, like 2 or 3 years of that, I was like, wait a minute. What if I intentionally planned for Q1 to not be my lowest year? And what if in Q4 I actually set the stage for Q1 to be successful for me? And so when I figured out what I needed to do to make that happen, which meant because Q4 I take off a lot of time also because there's a
Hmm.
bunch of holidays. There's
Hmm.
Halloween, Thanksgiving, Christmas. My kids out of school. I don't like to work during December at all,
Hmm.
literally at all. And I just want to do like admin in December. I don't want to like have to show up for clients and sell and do all the
Yeah.
things. And so knowing that, I had to really reverse engineer and truly start in January to plan for next January's success.
Hmm.
Because it was like end of Q1, I'm already bummed out again. I'm like, all right, this is the last year I'm going to be bummed out in
Yep.
Q1. What do I need to do? So the planning started in Q2 and ended up doing a really, really successful launch in September. Was it October-ish? Fall.
Hmm.
like, had my first six-figure launch. It was insane.
Nice.
And I was like, "Oh, the work and the planning and the six-figure launch in September, October, November, and the payment plans kicking in January, February, and March? Wow, look at her."
There you
And it
go.
just completely changed the tone of that entire next year.
Yeah, for sure. It really changes things. I'm like telling everybody, like, I'm like, literally, people jump on this because you will
Yeah.
thank me later, you know? I will see
Yes.
the difference between the people that like waited until January and it's tax
Mm,
season and you're like super in the weeds and you're like, no, 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 I worry about that later. I gotta get all my tax stuff. I gotta do this. I gotta do 1099s. I gotta do that. I'm like, don't like now it's the time. Like
don't do
get
that
it
to
all
yourself.
going, you know? And if you're raising rates in January, you don't want to do that in January. You want to let them know in November, like, hey, there's a price increase coming up. How are you going to know about that if you're not planning in Q4 for next year? You're not. It's just going to slip through, you know? So I'm like, why? Why? Why are we doing
I
this?
well, and it's funny because Coley, who we were just talking about, um, is raising her rates for her signature offer in the beginning of 2026,
Hmm.
and she, um started communicating that in but the time we're recording this is late October. I think it was, like, early October, late September that, like, "Hey, I've got 5 more spots," whatever the number was, "to this container at 2025 price point. When
Hmm.
those are gone, whether that happens in 2025 or 2026, the price is
Yeah.
going up."
Yep.
And so that transparency, I think, helps people make decisions, and I love it. I love the transparency.
Yeah.
Okay, I
Yeah.
wanna
Yeah.
talk
For
to you
sure.
about and go ahead because I'm pulling up something that I wanna share. I want your opinion on as a financial girly.
Ooh. You know, I'm gonna jump on here and say this.
Yeah, do it.
So I don't know if you remember this, like 8 years ago, I was on the Strategy Hour podcast.
Yes, yes. I know, you've been around for 87 years,
Yeah.
so
Yeah, it's almost been a decade, my goodness gracious, and you were like, "We have the numbers queen in the house," and ever since, I'm like, "That's it, that's me,
yes,
I'm the
you are
numbers
the
queen."
numbers queen. Yes, you are. Here's
It's
what's
so,
so
so
funny.
funny.
Is, like, conversations with people like you, people like the bookkeeper that I used to work with in that company, and other just financial inclined people. I'm sure I talked about it in the episode how much I didn't like the math of
Mhm,
it all and didn't like the data, and it made me feel uncomfortable. There was I've written about this a lot. I've talked about this story, but one of the first times so we had a bookkeeper at that company, and obviously they were, like, doing the books and doing the P&L and, like, sending us whatever. But a big part of that was also every single month we would meet and we would go over it, and we had that high level advisory of what to watch out for, what are other industry standards in expenses over here or savings over here or whatever. And I remember one of those conversations where I truly can remember if it was like a dicey money conversation. I don't think it was. It was just information and something maybe wasn't going the way that we wanted it to go. And I was sitting at my desk there on Zoom, and I'm so physically uncomfortable that I get out of my chair and I lay on the floor. And it was just one of those like full body like shut down reactions of like, I don't want to be here. I don't want to participate in this conversation. So I'm going to literally lay on the floor.
yeah,
And after that, I said, if I don't have to be at those meetings, I don't want to be. And the disservice I now know that I did to myself was removing myself from the conversation instead of saying, "Okay, what do I need to work on in myself? What do I
mhm,
need to understand in a better way, in a different way? What do I need how can I connect the dots of this data in a way that works for me so that I can participate in the conversations and not just avoid them?"
yeah, yeah, I always think, like, if you don't know your numbers or you don't know, you know, your financials or whatever, like you don't really know your business. You don't really know what's really happening in there. And that's where people just get hit in the face. And that's why there are so much statistics about like a lot of people, I think it's like 80 something percent. I'm like blinking now if it's like 83 or 87 that like they fail because within like the first 5 years, and a lot of it is due to cash flow issues because you don't see things coming, because you're just like hustle, hustle, bringing in money. But the more you bring in, the more you spend, and it's like, yes, the business made this much, but did you make that much?
Exactly.
And it's just like the conversations are avoided, or you just don't find the right person to work with that like connects with you, that like understands, but also helps you and empowers you and like makes you like feel comfortable, in such a space where it's not as comfortable. It's easy for me, but it's not easy for everybody. And I understand that. And so I try to make it really like fun and easy and like, have little breaks here and there, even during the
Mhm.
BIP days, like that's a full blown
It's a
like
lot of information.
5,
Yeah.
6 hours in one day that you're
Yeah.
sitting through, and it's not as enjoyable probably for the person doing it. I'm like, I can keep going all day, But for them, they're just like, "I'm gonna go take a sip of water over
Yeah.
here."
Yeah.
But I'm, like, joking or I'm like, something comes up and I'm like, "Oh my gosh, my kiddo the other day," and, like, I change up the conversation. So
Yes.
it, like, gives you a mental break and you're like, "Okay, now we're back at it?" So it's just kind of finding, like, those moments where you're just like, "Okay, how can I make this the most enjoyable, like,
Truly.
experience for the
Well,
person?"
and one of my hacks for that is, there's science behind change your environment changes your perspective on something,
Mhm.
right? We hear this a lot when, if students study in the same spot where they learned the thing and they take the test in the same spot that they studied, they'll perform better, right? There's a lot of connections to our literal environment and how it impacts the receiving of information, retaining that information, understanding it, all of those good things. And so, because quite literally for the past 2 years, in being back on my own again, I now am the CFO, the CEO, the CMO. I wear all those hats again, like
Yeah.
so many people do. And if I'm going to wear the hat, I decided I'm going to wear it really well and I'm going to
Mhm.
wear it to the best of my current capabilities. Yes, understanding what I need to outsource, but also not avoiding the problem and not just outsourcing right away because I want to be a part of this. I want to have a relationship with this department in my business. And for me, business finances are obviously, for a lot of us, are so directly tied to personal finances, right? We have this job, we make the money pays our bills, right? And so I realized, and that, like, even telling you this story, sometimes I'm sitting here being like, well, obviously, you dumb dumb. It took truly, I don't know why it took me this long, but I had been, because I did not start doing this until 2023, or what year are we in? 2025. When I went out on my own in 2023, was, in business, et cetera, and then planning and goal setting and doing all the things. And I realized there was this disconnect between what I was doing in work and money and how it was impacting my home, right? And my personal finances. And I had realized that in business, I had spent the past 9, 10 years of being in business, goal setting every single month, every single quarter, mapping out my year in, November, December for the next year, really
Mhm.
monitoring what's working, what isn't, doing a post mortem, analyzing it, and loving that. But I have never done it for my personal life, ever.
Mm.
Ever, ever, ever. And I
Yeah.
was like, "Hello, how about we get on the same page and marry these 2 departments of my life
Yeah.
and have some strategic goal setting conversations around what do we wanna do financially in our life right now and in the future? What do we wanna do differently about how we communicate with each other, about how we parent, about how we, take care of our bodies, about our own careers?" Like, all of these things, right? And so started to make it on our calendar, and we've done it every single month all year, and it's so amazing. I made a spreadsheet, obviously,
Yay.
and we have our different departments, so it's like personal, and then I have a column, my husband has a column. It's career column, parenting, marriage, friendships, health, like all of the different things. And we each, like at the beginning of the year, decided, like, here's what I'm going to be intentional about this year. Here are, if there's specific metrics that you want to do, put that there. Things that you're thinking about that you want to implement, that you want to try, all of these things. And every single month, we go to either a coffee shop or a bar, and I get a glass of wine or a beer, and
As
I
you
pull
should.
up. Pull up the laptop at the bar because I will be that girly. If you've got Wi-Fi, I'm bringing my computer, and I pull up that spreadsheet and we go over every single thing. And it's just this conversation of like, how do you feel about this? Do you want to change it? What's going on? What have you learned? What are you doing differently? And it's just like, it was 17 light bulbs going off in my brain. bitch, you've been doing this for your business for 10 years. Like, why wouldn't you also do this for your personal life?
I love that. Oh my gosh. That like taps so much into like, that's part of the reason why I switched over from just offering bookkeeping to CFO services,
Yes. Yes.
because I realized that it was, like, so small in, like, this grand scheme of things, and what I love about CFO services, it's that we really look at, like, the 30,000 fit view and able to say and when I work with my clients, I'm always like, "Okay, what are your personal goals? What are the things that you want to achieve?" You know? And, like, what are like, maybe it's something where it's like a work-life balance and it has nothing to do with revenue, you know what
Right.
I'm saying?
Yeah.
And it's just like, okay, then that just means we have to cap the services at this much, and we have to make sure that, we're pricing it at this much so that they are profitable. And it doesn't mean we're working more, it just means we're working smarter, you know? And so I love that, like, personal money date because it's so a lot of times we work, 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 and we're like not being intentional about our own like
Yeah.
financial goals or even like
Yeah.
at the end of the day, I'm like, even if it's not financial, tell me because somehow, some way,
Exactly.
it will tie back to like, even if it's like, oh, I want to put my kiddo in this like private school or whatever.
You need
Okay,
money
well,
for
that's
that.
tying exactly.
Yeah.
That will tie back to the business, which will tie back to the revenue, which will then tie back to the expenses and your owner's pay and how much we're bringing in and how much we're paying you and how much we're expensing out, which will then tie back to like how much you're pricing things at. Are they profitable? Are we at a gross profit margin? Like everything will tie back. Even if you think it's not financial, please tell me.
Yes. Say it.
Mhm.
Yes.
Mhm.
So speaking of financials and goals and all the things, because I'm a nerd, made a tool for my clients to
Okay.
help them with mapping out. It's not just pricing. It's a pricing calculator kind of. It's more
Huh.
of like, okay, so when I was doing digging into like how can I have a good relationship, a healthy relationship with finances and goals and revenue and profit and all the things, because I've certainly had an unhealthy relationship with those things in the past a decade plus, as we all have, right? Like, I want a seven-figure business no matter what, and I didn't know about any of the other numbers, didn't care about them. It was like, come hell or high
Mhm.
water, it's seven-figure, doesn't matter. Now I know more things, and I care more about profit. I care more about take home. I care more about
Yep.
savings and like all of the other things, right? And so I have started to look at and present my clients with two options, two different kind of calculators to determine based on how their brain works, how they want to map out that goal. Because typically my clients come to me and they're like, here's on average what I've been making, while they might have a benchmark of like, here's my minimum, so they'll do kind of whatever to like make
Mhm.
sure they hit their minimum, they don't know how to actually plan for reaching the stretch goal or the good, better, best, or
Mhm.
whatever it might be. And
Yeah.
so I come in, and my favorite role to play is, where are you at? Where do you want to be? How do we need to bridge the gap? Whether it's offers, pricing, it doesn't matter. So I created a tool that shows people two different calculators and how that impacts their offers, and if they change their price points or how many clients they're able to serve, how it can impact their revenue. And so I created a bottom up calculator and a top down calculator. And I may be completely butchering this entire explanation. Definitely correct me, but there's two tabs, and I'm looking at it right now because I definitely always get them confused and I forget all the time. But basically what you do in the bottom up calculator, you start with how much you want to actually take home. Like if you have a set amount of money that you're like, I have to pay myself 5K per month,
Yeah.
6K per month, whatever the number is, you start there. And then how much do you like to set aside for taxes? I always like to set aside more than enough. Some
Mhm.
people, do the bare minimum, some people do quarterly, etc. Chat with the tax person. She is not me. So you put your target monthly take home, you put your percentage per month for taxes. And then some people like to have a business savings and some people don't. And so do you want one? Do you not? And what percentage of that do you want to set aside for savings? And then in another column, you add what are your average monthly expenses. So this is not an accounting software. You're not typing in all of your expenses and getting an accurate number. You need to just look at the last few months, average it out, and put that there, right? This is a planning tool, not
Mhm.
a bookkeeping tool or
Mhm.
anything like that. So once you plug in those numbers, what it gives you is the kind of percentage of breakdown of, okay, so for example, if your target monthly take home is 4K and you want to set aside 30% for taxes, 10% for savings, and you have $500 a month in monthly expenses, that's 52% of your total revenue you're taking home,
Mhm.
8% for expenses, 30% for taxes, 10% for savings, right? Well, there are industry standards of expenses and take home, and there's the whole S Corp conversation. There's different percentages that you hit depending on where you're at. All of that, again, tax professional. But what it gives you is your target revenue. So, like, what is then your monthly revenue? What's your annual? What is a daily rate, a weekly rate, and a monthly rate that you should be aiming for if those are the targets that you want to hit? If your minimum, no matter what, is I need to pay myself 4K, this is the math of that, right? Well, some people don't have a set number of what they need or have to pay themselves. Maybe they've got, a partner that kind of their the income covers the bills, and maybe yours is the kitchen renovation private school fund. I love that for you. Okay, well then what is your target monthly goal? Because like based on your industry, based on your stage of business, like are you at 8K and you really want to get to 10K? You really want to get to 12K? I'm not going to say for no reason because there's always a reason and I definitely
Voice.
want you to have a reason, but some of us are like, I'm cruising at 8K, but yeah, my next phase, I would like to be a 12.5K a month business. Right? So you start with that monthly revenue goal. And then what I built are these sliders where you can then slide like, okay, if I'm making 12K, if the business is making 12K, what if I paid myself 10K of that? What's left over then to pay
Mhm.
for taxes, savings, and expenses? Is there enough? Okay, maybe that's paying myself too much and I should slide that down. And maybe we start with taxes and you can lock some of these sliders. So, like taxes never changes, savings might never change, expenses maybe doesn't change. So, it lets you know the fluidity of if you're making 10K, here's how much you could pay yourself. If you have a dip in that month and you go back to 6K, here's what you would then pay yourself if that can be flexible. So, all of that leads to the service actual planner. So, then you input your services, you input the price of your services, and then there's a toggle where you can say, okay, well, what if I raise my prices 10%? How would
Mhm.
that impact my revenue and therefore the distribution of that revenue? So I didn't mean for this to be a software like walkthrough, but like,
I love it.
do you think that that is helpful for service providers to kind of look at their business planning in that way?
Yeah, I think that it's actually very helpful, and I think I love that you have the 2 where you're starting with, like, this is how much you're gonna take home, this is how much you're setting for all of this, and then you're kind of working that backwards. I love that because a lot of times that's what people struggle with most is just
Yes.
like, "I'm paid last. I'm never paid," you know? "I'm
Pay
reinvesting."
yourself first,
Pay
profit
yourself first.
first.
Profit first. And then you even have the other one where it's like, okay, well, I don't need the money. And I'm just like over here, what if I just spent on this or spent on that? So I really, really like that. I think my only thing with it would be for sure, people, please, please save. I would say, please have business savings always and
Yes.
forever.
Let's talk
Please.
about business savings. Why?
Because I always like to use this analogy. If you have a home, you are the one responsible when the AC goes out, when there's a
Mhm.
water leak, when there's a plumbing issue. You are not calling a landlord. Okay. So you need to have savings to pay for that. Otherwise, you're going to have to put it on a credit card, get a loan, whatever, whatever, whatever. Let's turn the analogy on its head. Your home is your business. When there's a
Mhm.
slow season, when there's an unexpected thing, you end up in the
Mhm.
hospital, someone ends up in the
Mhm.
hospital, a family member passes, something happens, the kiddo gets sick, whatever that it may be. And now you have to, revenue takes a dip, or you're in slow season, or it's the holidays, or sales have slowed down, or something happened in the market, something unexpected, COVID, hello, something, right? Now you're like, oh, there is no landlord. I am the landlord.
It me.
It's me. There's no one
Yeah.
for me to call. I don't have a job that has a steady paycheck or whatever. And even that's a conversation for another day. But
Yeah, the volatility of that too, yeah. Okay,
sometimes it's
so
just
I think
better.
where my question and we don't have to get into the tax purposes conversations of this, but where I've at least been informed about business savings is like if it's gonna be left in your savings at the end of the year, then you're going to have to pay taxes on that. If you pay yourself that money, then there's could potentially be a different tax rate that that is taxed at. So some people, like, maybe you're saving and you have business savings throughout the year, and then you just cash that out and you kinda start your savings over the next year? Or is it, like, kind of it's negligible of, like, if you're paying taxes on money that's staying in the business?
So it just depends on how you're structured, you know? So if you're an LLC or like a sole proprietor, um, which is just like taxes like a like Schedule C within your like typical 1040 or whatever personal tax return, then it really doesn't matter because you're
Okay.
paying money based on what's like your profit. And part of your profit is whatever you pay yourself. Like it
Yeah,
doesn't matter.
yeah,
You're not on payroll. You're not going to, if you say, I am leaving $50,000 in the business, or I am withdrawing $50,000 from the business to myself, you're still going to pay the same tax regardless because it's based on profit. So
mhm,
it's just like what came in, what expenses are you able to deduct, and then whatever's your taxable income after expenses and deductions and credits and whatever. So it doesn't
okay,
really matter. And then if you're an S corp, then that's a little bit different because you are on payroll. You have to pay yourself a reasonable salary,
mhm,
and so you have to like have payroll taxes and have a little bit more of like strict bookkeeping, and now you're filing a separate tax return. And so that may be a little bit different, but even then anything that you do as a withdrawal to yourself aside from payroll taxes, I'm sorry, aside from payroll, it's still going to be profit. And so at the end of the day, it doesn't really matter. Maybe if you're structured as a different entity, I'm mostly like S Corp LLCs.
yeah,
But maybe if you're structured as something more like, I don't know, a C corp, or
yeah,
even then I'm not really sure. But at the end of the day, it's like doesn't really matter if you leave it there. You're taxed on taxable income, whether you
yeah,
withdraw it to yourself or
yeah.
not, basically.
Okay, well, I have been team pay myself all the things that of what's left over, and so I think that's my mission for 2026 is build up that business savings and have it as that cushion of, like you're saying, when months dip down. And, like, I don't like to work a lot in December, and December is one of our highest expense months
Yep.
because of the holidays and, like, all of the things, and so softwares are renewing in the business and personal stuff, and so, okay, alright, okay, fine. I'll do it.
And you could do like a quarterly bonus or whatever. That's fine. When you use an accounting software, you'll have your income and your expenses hit the profit and loss. And then anything that you pay yourself aside from like payroll, which will also hit the profit and loss, but anything that you pay yourself as like a transfer will hit the balance sheet. So
Yeah.
you're paying taxes on your profit and loss, like net income, not
Yeah.
whatever hit the balance sheet that
Yeah.
you
Yeah.
like transfer to yourself, did an owner's draw, a shareholder's distribution, none of that.
Yeah.
That's already like doesn't matter if it says net income 50,000, you pocket the 50,000. It's still going to say net income 50,000. You're still going to pay taxes on that.
I think I just need a bookkeeper, honestly.
Okay.
I think this is what
Well,
she goes, "Okay."
I might know somebody.
Weird.
Yeah, who knows?
It's so funny too because I just interviewed one of my good friends, Morgan, who is a bookkeeper as well, and, she was talking about, VIP days and the strategy conversation, and I love it so much when bookkeepers go true, like, bookkeepers, even when you're quote unquote just balancing books, that is a service that is needed. I love that. That is a skill set. And when those of you who add on the extra of just the conversation and the advisement and the accountability, I just love that. Someone who, like, grew up with a lot of money trauma is dealing with a lot of money trauma and unlearning poor money habits and behaviors and still being really close to them by family members who still make some stupid ass decisions. It's been a lot of learning over here, and
And
so having
unlearning.
someone, and what I talked to Morgan on that episode about was just being, like, feeling so ill-equipped to partner with someone in that way and being really, really shy about showing my revenue and expenses and whatever, and understanding that that's, like, also part of my hang up of, well, when I get that support, I think that I could actually do better.
And you know what? You might find out that you do better because you got that support,
Right.
you know? and it's, like,
Yes.
not the waiting, and a lot
Yes.
of times whenever someone's like, "What is CFO services?" or, like, "What is advisory?" or something, or, like, someone's just like, "Okay, but why? Like, why don't I just, like, hire a bookkeeper or something?" And, like, I started as a bookkeeper, and I even still do bookkeeping within my CFO, like, that is a
Yeah.
foundational piece, that
Yeah.
is never
Yeah.
going away, you know? I'm just like, "Well, my clients don't pay me for, like, balancing the books, they pay me for peace of mind."
Yeah.
They
Yeah.
pay me for the visibility of like, "Hey, I don't even know, how to plug this in." And I'm like, "Okay, let's look at the forecast. Let's look at where your bank balance will be at the end of the year. Let's look at what things are coming in and coming out. Let's look at decisions. Let's have that sounding board conversation of like, do I do this? Do I do that? Do I hire this person? Do I spend on this? Do I
Mhm.
invest? Is this a next year thing?" That is what they're paying for. That visibility, that peace of mind that I can sleep at night, that I know that there's money in the bank, my bills are paid, people got paid, I can pay myself. All of that is like on the back of all the reports and all the spreadsheets that they're not paying me for. They're paying me for the other things that they're like, okay, yeah, that's why I'll never fire her. Yeah. That's
Yes.
why she's on the team.
Yes. Yes. And
you
and
know?
this is what I was talking to Morgan too about, just like you were in such a, I hate the term recession proof anything, because
Yeah.
it's not true. Nothing is recession proof
Nothing.
truly. And your industry is one where it's like last to hire, or first to hire, last to fire.
Mhm.
And I think that there's quite a bit of peace of mind in that. Definitely, I'm sure you're seeing the impacts, depending on the type of businesses that you work with, of them being impacted by the economy and
Mhm.
spending behaviors and habits. But you, especially when adding the advisory, creates this, like, exactly what you're saying. Why would I fire her? Why? Like, it's a line item that's always going to be budgeted for.
Yeah, and it's someone that's there, like, looking, like, they see around the corner. They're
Yeah.
looking ahead, they're thinking about what you're not thinking because you're in the weeds of, like, running your business and doing all the other things, and by the time you remember, you're like, "Oh, I gotta get to that tomorrow." That is
Mhm.
my job, to get
Yeah.
to it,
To get to
and
it.
so I
Yeah.
am, like, the one that's looking at it. I'm the one that's like, "Hey, payroll is going this way. Hey, we said we were gonna be at this margin. We're actually going over. Why is it over? Why are
Yeah.
we doing this?" And so there's times that I've even had clients that say, "Well, that's why you're on the team, like,
Mhm.
that's you just found this thing that I wasn't even looking at all the money that was going out, and
Yeah.
you're looking at my margins and you're saying, 'Hey, we said we were gonna be at this much, and now we're down below. It's been months too. What's going on?'" And
Yeah.
you're looking ahead. And so they're like, "Where would I have this visibility if you weren't the one outside of it looking? Because sometimes we can't see the forest from the trees."
For sure. I know at the beginning of this, we were wanting to really dip into the conversation about profit.
Mhm.
And I posted a spicy post on Substack and Threads and my podcast earlier this week. Months ago at this point, by the time you guys are actually listening to this episode, because that's how far ahead I am. I think this is not going to air until January, which is bananas to me.
My
I
gosh.
know it's
Well,
wild.
VIP days may be all
Yeah.
booked or who knows? We'll see.
Yeah. But at some point, I talked about the conversation of stop worrying about building a seven-figure funnel or a seven-figure business when you haven't even reached six figures. And that wasn't to say, "Oh, you haven't even reached six figures. What, like it's hard?" That's not what I mean at all. I
Mhm.
mean, you are truly thinking of tomorrow's problems when you haven't solved for today's. You haven't maintained a foundation that gets you ready for those problems. And I think that the subset of this conversation is profit. And I think that there's a lack of transparency in this industry of folks who use financial wins as their marketing angle of, I made this much, my clients made this much, that what's being spent isn't talked about, what's being paid out in actual owner pay isn't being talked about. And so from your angle of everything that you see behind the scenes, what is your take on the profit and revenue situation?
Yeah, so I actually have a hate-love relationship with all of those, like, revenue screaming from the rooftop posts
Yeah.
on Instagram
Yeah.
because
I
I'm
do
always
too.
I'm always like, "Okay, but how much did you actually make?" Like, what was your profit at the end of the day? How much did you spend? Because I have seen it a lot of times. I have seen where people sell like, it could be $10,000, $12,000, and they have contractors to deliver that service, and then they end up paying themselves less than they paid the contractors, and I'm
Yeah.
like, Great.
Cool.
So you just hired a whole bunch of people, managed them, and then paid yourself
Yes.
pennies.
Yep.
So it's like, I just sold this, whatever. And then, okay, how much did you make? No one's really talking about that, you know?
Mhm.
And that with my clients, it's all about, even when we do like, we sort of do like a BIP day in a way when we onboard a CFO client, like on a partnership retainer type of way. And even then, we start there. We start like, okay, let's look at this pie graph, sort of what you were saying, that it's like, okay, as money's coming in, where is it going? Where is it being allocated? Because the last thing I want you to do is set revenue goals and have no profit and distribution for that money actually coming in and just be like, I just want to reach, 250. If I am at 250 by next year, okay, that's great. What does that mean for
What does it
us?
mean?
What does that mean for us? Like,
Mhm.
what does that mean in your, like, owner's draws? What does that mean for the business? What does that mean in tax? Because I don't want you to then have a huge tax bill because we didn't do estimated tax payment. Okay. So what does that mean there? What does that mean for your goals overall and not just your business goals, but also your personal goals? So I'm like, everyone is screaming from the rooftops, all this like 6 figures, 7 figures, top line, all of it is top line.
Mhm.
What is the profit in all of it? And no one wants to talk about it. So I'm like, and then they come when there's like capital issues.
Yep.
It's like,
Yep.
why am I
Yep.
making this much, fill in the blank, 30, 20, whatever K a month, and then I can't pay myself, or I'm stressing about this, or I'm stressing about payroll, I'm stressing about that. Okay, well, let's dissect. You overspent. You actually need to make this much
Yeah.
to actually be able to sustain everything else that's under that hood, you
Yep.
know?
Well, and I think this is a critical conversation for, because this show is by service providers for service providers. And so service providers might be listening to this and being like, okay, I hear you. And my business runs on like 90% profit because it's super affordable to run a service business. If you don't have a team yet, it's so affordable to run a service business. Okay. What happens though, and what I see is when service providers, do want to make more and they realize they're at capacity because they can only work with so many
Mhm,
clients, right? Maybe they've raised their rates a little bit, they've helped that, but they hit what I call ceiling season. You can't make any more revenue unless you serve any more clients, but you can't serve any more clients because you don't make enough to hire anyone yet, and you're at this like limbo where you're stuck. And so for me, the answer for that is productization. That's what I talk about all the time. It's what my core program is about, etc. But what they think is the only option that's available to them is to sell a low price offer, whether it's a DIY version of their service, a course, a template, some sort of down, whatever, like for that offer. And what they inevitably end up doing is accidentally creating an entirely different business because their done for you folks are not their DIY folks. You have to market to a different person who has different pain points, who wants different ideas and goals, etc. So what happens is what used to be a very inexpensive business to run. Getting leads is really inexpensive as a service provider. Your CRM is inexpensive. Billing them, you do the delivery and you're done. Like you get to keep the majority of that money, right? That's not the case in a one to many business. You're talking systems to house the course or the curriculum, design tools to make the assets. And maybe you're outsourcing the creation of some of that, an email list where you're having to grow and email your people and actually spend time creating content, potentially a different website and a shop. And then you move into the conversation of social media marketing or ads and how are you actually growing that list and getting eyeballs there. And you come from a business that is so profit heavy to something that can very easily suck all your profit. And I think, speaking from experience, because this was me, that was a huge mind fuck when I made that transition. And I didn't realize that was the case for a while in my one to many business. And it impacted a lot of
mhm.
things.
Mhm. Yeah. Or even when you're like, I'm gonna bring in more people, and then I
Yeah.
realize that like you're like, I need to bring in support to scale. Okay, have you actually ran the numbers before you bring in support to scale? What's the ROI for this person? What is the learning curve? I always tell people like if you can't set aside 3 months of what you would pay that person, you're not
Yep.
ready to
You're
hire
not
them.
ready. Yep.
Nope, you're
Yep.
not, because people are not you're not gonna hire and be like, "Well, next month, I'm gonna be able to make double what I'm making now because I have XYZ person on my team. Does not happen. There's a learning curve, and
And
yes,
that
they
learning
will
curve is
eventually pay out.
typically 90 days.
Yes. That's why even, like, in corporates, like, "Oh, you're in probation period." You know what I'm saying? And so it's like, you need to have that in there so that no matter what happens during those first 90 days as far as revenue is concerned, you're not like, "Well, I was counting on paying you out of, like, whatever was gonna come in that month." And it's
Yep.
like, don't do that. Like, if you can't even set aside 90 days to pay them, you're probably not ready to hire,
Yep.
you know?
Well, and the one of the lessons I learned, it took an embarrassing a long amount of time for me to learn this lesson, but the idea of, like, having a cash runway and that runway, um needing to be longer depending on how
Mhm.
quickly results come in. So, for example, the way that I learned this lesson was through ads, but service providers can even learn this lesson too,
Yeah.
right? Depending on who you're investing in. Maybe you're going to a networking event that costs you a lot of money to show up at or whatever. How long does
Mhm.
it take for those conversions to come in? That for that ROI to actually show itself? That's the runway that I'm talking about. Well, in ads, you spend money on ads upfront and you get leads from that, right? The faster those leads are able to convert into a paying purchase that is more than what you spent to get them,
Mhm.
impacts your runway, right? And so I was in a business at one point, because ads change, privacy laws change, ads are changing all the times. The effectiveness of it, how much
Mhm.
they cost, like all of it. It's just the nature of it. And I remember I was like in this campaign and I'm like, why is this like feeling more expensive than normal? Like we're not spending any more money than normal. Like what is happening? And it was right after Apple made a lot of their privacy changes. And so
Mhm.
retargeting ads were a lot different. Ads weren't performing as well. And so what had been a 30 to 45-day return on investment was like a 90, 100 plus day return on investment.
Wow.
And you have to factor that in to your spending because if you bleed all your cash out and that's not coming for 100, do you have 100 days of cash to carry you through that?
Mhm.
I, it was eye opening.
Yeah. Yeah. The runway piece is something that people are just not thinking about. The
Mhm.
same way with just forecasting. It's like, or projecting, or just like they don't know where to start. And I'm like, it is literally a tool at the end of the day. And it's actually not that hard. You know, you could look back at like historical data and you could just look ahead and say, okay, I've got this launch coming up and this is what, and be conservative. You know, if you're
Yes.
like forecasting revenue, your best friend will be to be conservative. You know, your best bet will be to be conservative because at the end of the day, you don't want to overestimate and like be in cloud nine. If you know, knock it out of the park, even better. Great, you know, but be conservative, but go by like, okay, last time, if you've been in business for a few years, you already know kind of like, okay, this is low season for me. This is when
Mhm.
it picks up. You know what I'm saying? So you can definitely use those. You can definitely use those months and those like peak seasons and, you know, quarters or whatever and plan ahead and kind of say, okay, this is how much money I'm anticipating coming in. Do an expense audit. You know, a lot of times I'm like, when was the last time you did an expense audit? Like never, you know, and then money's just bleeding out. And I'm like,
I've done so many expense audits this year because I learned about myself that I overspend in education, strategy. If I just learn this thing, then it will do whatever. And I had a pretty rude awakening this summer about that and vowed to change my ways. And that has also been a big reason why I haven't brought on a bookkeeper because I'm embarrassed by the expenses and by what I decided to spend money on and didn't. And that's a whole other conversation, but that is a huge reason why I haven't done it. And I'm committed this year to changing those habits and behaviors because not just changing them, but I first had to understand why was I doing it and where was it stemming from and what did I one thing my therapist taught me really well that, gosh, it's just impacted so many areas of my life. She has, when I've come to her with a like, I do this and I don't know why, and it frustrates me, and I don't want to do this anymore, and
yeah.
help me just stop doing this. Like, I'm very much like, give me the thing to do to not do this anymore. And so she's amazing. And she was like, okay, I want you to pause and really think about and reflect on, yes, the behavior that you're describing, you're saying it's negative and you don't want to do it anymore. I want you to look at that behavior and that decision and really ask yourself, how when I do that, when I make that choice, how is that actually protecting me? And if we can understand the positive light of even the negative behavior, we can really start to disentangle where it's coming from. And one of the like light bulb moments I had, and I think I talked about this on my other podcast. I have so many podcasts now that I don't know where I'm talking about anything. But one of the things that I said was, she said that to me, which really had me reflect on like, okay, why am I buying that course? Why did I buy from that person? Why did I buy that strategy when I don't even agree with that strategy? I don't like that strategy. I don't want to implement that strategy. And yet I paid to learn how to do it, right? Why do I do that? And so I'm uncovering all of this, having a conversation with my husband about it. And he was like, I need you to know that you've been in this game long enough. You've done really well. You don't need to know anything else right now. Like you have all of the skills right now to get the results that you want already. And so I pushed back and I was like, yeah, but the reason why I got this one is because this could happen. And this is because this result. And he said, I think what you're after are exponential results. I don't need you to be providing exponential results. What we need is consistency. That's it. And he's like, so that was the sign of like, oh, how we both look at my business is from two different ways.
Totally
He's
different.
like, how can you make the same amount of money every month so it's predictable and we can build upon that in our family? And I'm like, how can I make the most amount a month in the shortest amount of time, but also spend a lot to try to get that result, you know?
Yeah. 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 And I would even challenge you, when you're like, "Oh, but I'm embarrassed." I'm like, "That's also like why I haven't like hired a bookkeeper or something." I would even challenge you to think about maybe even like childhood, just because I've come up against a lot of that.
100%.
Okay. Because that has been something that like I've had to walk clients through of like, listen, there is no judgment. I have seen it all. I have cleaned up books. I have
Mhm.
like started brand new books. I am here to literally whatever is done in the past, we're learning
Mhm.
from it. Now
Yeah.
we're moving forward, which is a
Yep.
lot of like, remember, I am here to be a partner. I talk in a lot of like, we spent this, we
Yes.
did this.
You've used that a lot even in this episode, and I'm like,
Yeah,
"Oh,
because it's
that
just the way I talk.
yeah, yeah, it feels good though."
Yeah, I'm always like, okay, we need to make this much because it
Yeah,
ties to this. We need to do this. And I'm always like, listen, Boxer is right there. I'm a boxer away. You can always
yeah.
box me. You can always ask me. Even when they're like, I want to spend, even I was having a conversation with a client earlier and I was just telling them, they were like, I want to spend on this thing. She's like, I'm not going to try to convince you, but here's everything. I'm like, why I should do that. And I'm like, okay, I love you and I love that you're going about it. First of all, thank you for coming to me and telling
Mhm.
me before like actually spending it. So I'm always like reaffirming and I'm always
Yeah.
like, okay, I even when I'm like, okay, go plug it into the spreadsheet. I'm like, I know I could do it, but I want you to do it so that
To
you
see
could
it.
be
Yeah,
empowered and you could see it,
yeah.
And then they're always like, oh, thank you. I now I'm seeing it before my eyes. I've helped clients. The other day I was on Voxer with a client and I was like, we're trying to build this thing and she's trying to send this proposal and there's things on there and she's like, it's not at the gross profit margin that you would like. I'm like, okay.
You're like, "I have taught you so well."
By the end of the call or like the Voxer, because it was literally back and forth workshop, da 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 da, and it was like by the end of it, we went from like 20% gross profit margin to 56% gross profit margin. I'm like, now you can send off the proposal. Thank you. And there's like no judgment. There's just like, I'm like, I'm just here to help you. Like, I'm human too. Like, I've done my share of mistakes, even in finance, even knowing better. Sometimes I'm like, who
Even knowing better.
like, who made this decision? Like who reviewed this thing, So I'm always like, there is absolutely no judgment. It's just like, even if it is things like I also like I talked about it. I was on a summit a few weeks ago. It was like a Latina, like because I come from Cuba, and I'm like, I even had a lot of that scarcity mindset, and I did not grow up with much, and I've had to like crawl my way through like mindset of like now even going from I'm like coaching other bookkeepers to add like advisory services
Yes.
because I'm like I was just like you. I was charging the $200, $300 service. And now I have like one client that times four. So I'm like, and they will pay and they will find value, and they're not even paying for, like I said before, the report or the pretty spreadsheet or
Right.
whatever. They're paying for what you're bringing to the table. The fact that they can come and bring something to the table and you're like, okay, let's dissect it. Let's open it up. 20% gross profit margin. Yep. Not where I would like it to be. So let's fix it. Remove this, add that. This is too low. I've taught you better.
I've taught you better.
Listen, sometimes it is hard conversations. I always warn clients, I'm like, I'm not a yes girl. And sometimes I will push back and sometimes I will, but I will give you my reasoning, and I will say, this is why I'm thinking that that's not, even this morning, I was like, you're looking to make this investment. It could be anything. It could be whatever amount. Let's look at the elephant in the room. This is what we got, bigger fish to fry than this one thing.
Yeah.
And I was like, we got this coming. We got that going. Look at this bank balance. Look at that over there. By the end of it, she's like, okay, yeah, I think we could just table this. I see what you're saying. I was not looking at that. I'm like,
I love that. I love that though. And like you are one of my core philosophies in business. And I feel like this is what you're doing. This is a big part of what you're doing. One of my core philosophies is I'm not here to just strategize and help you make the decision on what systems to put in place or how to optimize this or what to price for this or whatever. I'm here to help you change the way that you think about
yeah,
your business by
yeah,
looking at your data and then understanding what is it telling me. And mine is definitely more in the like marketing, messaging, positioning side. But it's the same concept. And it's, yes, I'm going to be here and be a thought partner with you. And I need you to flex the muscle so that if
hmm
I, when I'm long gone, you can still think about this differently. And when you think about it, when you flex the muscle yourself, you think about it differently in every aspect of your life,
yeah.
not just this one.
Yeah. And this specific client I was talking to today, she also offers very much like, she's in a different industry, but she also offers very high level overview type of things. And she's like,
Yeah.
oh, so it's the equivalent of like a client saying this. And I'm like, yeah, but we
Yeah.
don't even got this going on. So
Right.
we shouldn't be worried about that. So I'm like, exactly. Apples to apples, different industry, but you're still thinking like that higher level advisory type of way. And now you understand why I'm like, there's bigger fish to fry here for sure.
Yes. Yes. I love that. Haley, this has been phenomenal. I feel like I've learned so much and
Yay.
I've known you for years and
I know.
I don't know, I feel like got to know like a different version of each other today. And I really like that.
It's been so long.
It's been so long. I know it's been
Yeah.
so long, a decade or more, but since we've seen each other, that's crazy. Tell everyone where they can learn more about your services, where to hang out with you online, get to know you better, all that good stuff.
Yeah. So I hang out on Instagram. You can find me at Cutting Edge Financial Solutions. And also that's the website, cuttingedgefinancialsolutions.com. I offer VIP days. I also have a membership as well where I show up and it's like the best, easiest way to get like coaching from me at like a low, affordable rate and like a
Nice.
group setting. It's beautiful. I love it there. And then I also have my CFO partnership, which is like my flagship offer. But either way, either a VIP day or a CFO partnership, yeah, come hang out with me on Instagram.
Yay. Okay. Thank you so
Hey,
much. Guys, I'll have all those links in the show notes for you. So you can click right over there. Thank you so much for coming on and yapping about business money and profit and all the good things today. I really had a good time.
thank you. Likewise. Thank you so much.
Hey, thank you so much for listening to this episode of Sell the Damn Service. I'm really honored that you spent however many minutes you just did with me. Now, if you could go do me a very quick favor and be sure to like, subscribe, leave a rating and a review for this podcast over on Apple Podcasts and Spotify, or, pick your favorite platform. I'm not going to be that choosy. It truly means the world to me. It's how little tiny shows that are like mine, that are self-funded and, being edited in between dinner time and school pickup, it helps us get seen. It's free for you to do and takes just a couple of minutes. And I would love you forever. If I could send you an edible arrangement as a big thank you, I would. So instead, consider this giant thank you directed just at you for going to do that. And share this episode or this podcast with a friend who needs to hear it. I love ranting and raving about service-based business strategies. And, I think more people should listen to this show, honestly. So I appreciate you. Thank you so much. I really, really, really am grateful that you're here, and we will chat very soon.